Good evening, I'm Giuseppe Basile. I'm the analyst central. You can find at the website www.fipstalker.com. I also post regularly on Twitter using the @fipstalker nickname. Good evening. Today is December the 21st. It's Sunday. It's 15 minutes to 12, and I'm going to provide to you this video review of the 12 markets I follow, plus I'm adding tonight the USD Swiss franc. So let's start from the euro. We know that from the larger time frame here, we know that this market is um, somehow it's actually targeting this 121.25, 21.40 level here, and that's the larger level on this weekly time frame, which is the trace from the lows to highs. Will this market find participation at this level? We don't know just yet. What we know is that we were able to identify a measured move here, and that was after the fact. And this is uh, this is currently pushing this price lower into the first target. It was touched already, and there was some profit taking into that. And at the moment, price is being pushed into that second target. So we will see whether this market will get participation, and if we get into the 120.48 level here, we're going to use the next extension short in order to track this market. This market has tried to put on a move higher here last week, and after the sequence of measure move failed here, as you can see here, there was participation at this 50% level, 123.71, which were priced right into that first target, and then after that the next measured move in the sequence failed, and also the all the way halfway back failed. So at this point this market is just continuing lower into that 121.25 first, and then potentially even lower. On the other hand, the SP500 has been finding participation to one of the first of the two level I gave. It was an extension long from 1863 to highs, and the sequence of measure move on the opposite side broke when market actually found participation at this level. So this level was identified well before the fact, more than 1 week before it actually presented, and now this level has a target which is 121.20, so it's above that first target of the larger it is provided in the larger time frame, and that's that 120.2101. So at the moment both the inner measure move and the weekly large weekly measure move long are actually pushing price higher into that 21 level. The dollar index, of course, as the euro continues lower, the dollar index continues higher, and we know that this market actually has challenged, and it has the potential to move all the way into that 99.92 and even 104.78. So we are not going to see for this market a sensible retrace until the euro will actually show us whether it's going to respond to to that important area, the 121.25, or not. At the moment, the this dollar index is actually trading one notable anchor. If you want to learn more about these anchors and how they actually how you can use them to perform price discovery and price, you can join my coaching program. I have um, the new session starting on January the 10th, and that's an opportunity for you to get involved. So moving to gold. Gold has been reacting on top of this very large on the weekly time frame area of support here, but we saw it moving lower in the last week, and I mentioned that this market could actually eventually go to retest the all the way into the lows to highs here in 1184 level here, and that's what happened basically on Wednesday, and we saw this market participating on the upside. So we will see whether this level actually will hold. As we can see, we are also seeing participation on the short side starting at that 1210 level. So it's very important to understand whether this market is going to this level, the 1884, is going to support price, and in that case price can continue higher and will continue into that 1264 level. Moving to the US dollars to Japanese yen, this market continues to be very technical. You will remember that last week I showed you the failure of the sequence of measure move higher, and that happened. The market started moving lower. In this market we had two important levels to monitor. One is the next weekly long, and we're going to find algorithms participating long if the market gets back into this 112.80 level. If we get there, we should see participation there for a continuation higher. However, this market also reacted to another important daily level, and that's an extension long from this high to high. If you want to see how I derived these levels, you can go back in my videos. There's a sequence of measure move, and now there's an extension move. So this level, the 115 116 here, based on new highs, was known in advance as well, and the market actually bounced after this level, and it's now trading into the all the way halfway back. So there is still a possibility for this market to be picked up by, well, actually there was a possibility for this market to be picked up on Thursday, but as you can see, then on Friday this market actually pierced the 1945 here level, and that's a confirmation for us that this participation is real, and now this market could actually continue higher from this level even before coming to actually test the weekly level. And so there is a possibility for this market to continue high. If that does not happen and the market actually eventually corrects and breaks the 114.59, then the participation, we're going to test for participation at 112.80. And mind that I never buy at these levels, long or short, because I have a mechanism which I call flip stalking timing technique, and that's a technique that studies the sequence of measure moves that is induced by algorithms on the smaller time frame, and I use that to get confirmation for a continuation in the direction of the trend. And on top of these levels that we are able to identify way before in the process. So next would be euro versus Japanese yen, and let's see. So the euro versus Japanese yen, as you can see here, this market has, on the larger time frame, has actually failed an important level here, the 134.65. And when that happened, although we saw a move higher, I mentioned that after price would hit this 149 150 level, we could see we could see a sensitive retracement here. Now that level was price came very close to the level 149.78, just 22 pips, 21 pips off that level, and we started seeing a correction here of the euro versus Japanese yen. Of course, this market has moved higher because of the huge injection of currency, of liquidity in the Japanese market, but on the other side, the euro is in a crisis at the moment, and despite that, the euro has gained versus the Japanese yen. This is a situation that could correct in the coming days and week. And after we saw this price approaching that 150 level, we saw price moving lower, and we saw participation at this 148.14, which I provided last week, with price getting um, last Sunday, with price getting into this first target, did not touch the second target. So this week, this market has the potential to test the and continue testing the all the way 146.60 level here, which was tested twice, and three times, and potentially a fourth times if the market gets into the 146.60 and get the gains participation on the downside. We could see this market moving into the next target, and this would come at this 144.20. So if you're short, there's no reason to remove your shorts in this market. Moving to the pound versus the Japanese yen here. Um, this market is actually also correcting, but it's in a slightly different situation. This market is actually within a large area of potential resistance here. As we can see from this weekly chart, the market went started moving higher at the end of 2011 and continued its move higher through 2013 and 2014 here, and now it's within this area of potential uh, potential uh, potential resistance here, and this market could actually move away from that area and start selling. Now we saw this sequence of extensions, participation 165.83, price got into the first target, and then the next measure move actually saw participation of algorithms again at that this time at that 168.75. So there was a deep retrace here, which brought price into that first target again, and into that potential area of resistance. So if this price corrects from here, and we're going to see on the daily time frame what are the conditions for that to happen, then we are going to potentially see another deep retrace of this market if current highs are not put in jeopardy here. Now, if we look at the daily time frame, though, we had initially a measure move short here from highs to lows, and we saw participation and market getting into the first and second target here. The next measure move failed, and price again came into the next sequence in the measure move here. Okay, I had to interrupt the video, so I'm gonna get it from the last from where I interrupted it. So as we can see from this chart here, we can see that the all the way halfway back has failed, which means that there is the potential for this market to continue higher into the second target of the current setup, which is this 168.70. If the sequence of measure move higher actually fails, however, there will be an opportunity to enter this market short for a trade into that level that I showed you, the next level in the sequence, in the long-term sequence. Moving to the pound versus the US dollar, which is the next market here. I want to show to you. We know that this market is actually going to test the 153.55. Why do we know that? Is because only at this level we are going to see sensitive participation, and this level is not a previous low or a level that is identified by common price analysis. This is a level where potential participation from algorithms can actually happen. Is a 50% level, and the market has continued lower last week mainly, and again we could identify a sequence of measured move here, but the the area where to get short in this market was much higher. So what we are looking for this market is a retest of that 50% level on the larger time frame. Moving to the Australian dollar versus the US dollar, this market has continued lower, and we know that this market has the potential now to challenge that all the way 61.8% level, and um, um, we also are looking at this market in the long-term range here from 2001 to 2011, sorry, and that would be 79 level, 79 30 level that this market is going to test very soon here. And actually this market could go below that level, as we have a potential second target there. We will see what happen at this important level here, and of course we would anticipate participation at that level, and we're going to use our techniques in order to verify that. Moving to the US dollar versus the Canadian dollar, this market actually has actually moved into now the second target of that basket setup that we identified in we have identified in back in April here. And as you can see, this market is putting in jeopardy the all the way halfway back retest from highs in 2009 to recent lows, and the market went into the 61.8% but has not pierced it. The 116.72 is below the 116.72.2 here, right at the level, and um, and this is also the second target of that basket setup. So it's possible for this market to uh, to actually come for a move lower here. This market has been very difficult to actually to model, but eventually this market is going to become technical, more technical again here, and we could make the case that this extension is in play here. And if the market does not pierce the 61.8%, and even if it does that, there is a possibility for this market to retrace into the next measured move. That would be the 113.27 at the moment. Moving to the New Zealand dollar versus US dollar, this market has come down into the 0.77 level here, tested once, twice, three times, and a fourth time here, and still has the potential to continue higher. Now, the timing of this market has not been easy to do, but it has offered various trades all the way long. So, that's what you have to do if you want to get very good reward to risk kind of trades. And finally, US dollar versus the Swiss franc. This on the other side has been a very good trade, and you will remember that in the past I mentioned the extension from this high to new highs with 2 weeks in advance, and that trade also had already a target 098.36, which was actually hit on Thursday, as you can see here. And before the market got into that target, it offered another opportunity for a trade. It was from these the low to highs. There was participation at this 095.50. The market came just below that first target, which was very close to the larger target of the 093.61, and then came for a second test here, and second test a dangerous test, but then in only 3 days got into that first target. So remember now that this trade has been completed here, and the larger trade is an extension, so it means that this market has the potential to bring price no, this participation has the potential to bring price to parity here, the US dollar at 1 versus the Swiss franc, and that's probably where we could see this market in the coming weeks, especially if the strength in the dollar continues. And this is it for today. Thanks a lot for following this review. If you're interested, as I mentioned before, I'm starting my new coaching program in on January the 1st, sorry for that, on January the 10th, sorry. And if you're interested, you can shoot me an email and ask me for information. My students are having a great experience, and they're actually learning how to fully take advantage of the presence of algorithms on price. If you want to learn my techniques and timing technique and ways of identifying the important levels where we anticipate participation in program trading, as well as you want to learn how I blended this understanding and knowledge I got from other traders and mentors with my own research, you can contact me and ask me for information on the coaching program. Thank you very much and have a great trading week. Bye bye now.